Should I buy real estate in 2020? I get asked this question all the time. Should I be buying real estate right now? Let's talk about having 2020 vision regarding investing in multifamily in 2020. Hi, my name is Rod Khleif, and I'm host of the #1 commercial real estate podcast on iTunes called Lifetime Cash Flow Through Real Estate Investing. I'm also author of the best-selling real estate book on multifamily investing titled How to Create Lifetime Cash Flow Through Multifamily Properties. So, real estate values, they go through cycles, and we're at the top of a cycle right now. There's going to be a contraction in the near future, in fact, if it hasn't already started. You know, Rich Dad, Poor Dad author Robert Kiyosaki was recently quoted in a podcast saying that the contraction has already started. Additionally, the acclaimed economist and best-selling author Harry Dent just came out with a book titled The Sale of a Lifetime, how this great bubble burst that's coming, can make you rich. And he also talks about that the contraction has already started. So you think to yourself, is it really a good time to buy real estate in 2020? Let's answer that question. Now I'm going to start by breaking it down between buying a home to live in versus buying investment real estate, multifamily. So let's start with buying a home to live in. Well, the first thing I'd say to you, if you're looking to buy yourself your first home, is that if you're ever going to be interested in actually investing in real estate, you should consider buying like a duplex or a triplex or a fourplex. That way, when you move up, you've already got your first rental property. And if you purchase it right, you could be living very inexpensively or even free in many cases with, the renters in your other units paying your mortgage payment. Now that said, purchasing a home to live in is very subjective, and it's an emotional purchase, and because there's emotion involved, and of course you need a place to live, that comes into play when you're buying. Now, the interest rates are still incredibly low historically, so I would tell you to, weigh the fact that you're likely going to be paying top dollar for the home against the fact that you've got great low interest rates. Now, many people say it's likely that interest rates are going to go up and not reach these low levels again, but right now they're actually declining. So I'm not really sure I believe that, but who knows? That said, if you're asking my personal opinion, I would not buy a single family home to live in right now because I believe the property values are likely going to go down enough to justify a slightly higher interest rate if they happen to go up. Now, I take a different approach as it relates to multifamily investment property because multifamily investment real estate should be purchased based on its cash flow and its ability to service the debt on that property. When you buy, the values really don't matter that much in multifamily real estate. I'm going to tell you that buying a multifamily investment property based on value versus cash flow is a huge mistake, especially in 2019 and in 2020. Value is really out the window. That's why the subtitle of my book, is the new rules of real estate investing, i.e. the new rules being focus on cash flow, forget about property values in this hot market. Now, I've got podcast listeners that send me deals to look at and students that sometimes send me deals to look at, and they tell me, this property sold for $3 million 4 years ago and I can buy it for $1 million. I tell them, that's not the barometer that matters the most when you're looking at properties, investment properties today. What matters the most is the current net operating income and that property's ability to service the new debt. For those of you who don't know what net operating income is, it's also called NOI. It's the net income on a property after expenses before your mortgage. So it's your gross income less your property-related expenses without the mortgage. That's your NOI or net operating income. Also, if a cash-flowing multifamily investment property is purchased with a decent debt service coverage ratio, you can survive any contraction. So let me also take 2 seconds to explain debt service coverage ratio to you. It's a very simple formula. The debt service coverage ratio is what a bank's going to look at and what you should look at when you're evaluating an investment property. So to figure out what it is, when you're looking at a multifamily property, you just divide your new mortgage payments annually for the year by the net annual income of the property for the year. So to give you an example, if you were netting $100,000 annually on an apartment building and your mortgage payments annually were $100,000, that'd be a debt service coverage ratio of 1. Okay? Now in the same example, if you were netting $125,000 a year on that property and your mortgage payments were $100,000, that would be a 1.25% debt service coverage ratio. You got that? Now that's the minimum a bank or lending institution will require as well, a 1.25% debt service coverage ratio. And I personally won't buy a property unless I can have it at 1.5, 1.6% debt service coverage ratio, or the ability to get there very quickly with a small bump in rent or decrease in expenses literally right after closing. So if you buy multifamily real estate in 2020 with that barometer, you're going to be fine and make lots of money. There are lots of people, myself included, finding great off-market deals out there. Even in this hot market, we've bought over 1,000 doors this year in 5 markets. But that's because we're focused on off-market deals with brokers or connecting directly to potential sellers because the market is so hot right now. You know, right now we are kissing probably about 200 frogs to find a deal, okay, which is okay. And there's nothing wrong with that, but that's what it takes right now. You've got to look at a lot of properties. So properties that are listed with real estate, with a real estate broker in the market are most likely overpriced and frankly usually not worth consideration unless they're off market. Now I go into how to find off market deals in this hot market in my book. But let me give you some thoughts right now. If you're going to go after larger properties, then deepen your broker relationships. Deeper broker relationships are your absolute best bet. Develop long-term relationships with brokers because they can make you wealthy. Of course, if you're going after smaller properties, direct mail is a home run. Now, if you follow me on Facebook, I do a lot of Facebook Lives about specific topics to help, train my audience. And I know I've done one on the nuances of direct mail, probably more than one actually, so you can check it out. Believe it or not, driving for dollars is a great strategy. I've got students that have bought millions of dollars of property by driving around looking for rundown properties. In fact, my sister just found a great deal in Baltimore, driving around looking for rundown deals. Now, if you're going to go after larger properties, cold calling is a fantastic strategy, even smaller ones as well. But larger ones, cold calling works really well. And that's what all real estate brokers do. No reason you shouldn't, right? Newspapers are actually a great way to find deals because nobody looks there anymore. Let's say you're an 80-year-old crusty old seller. You don't like those brokers and you're going to list the property yourself. Let's say you got an 8-unit, 10-unit, 20-unit, whatever, but you're going to sell it yourself. Where are you going to market it? I mean, you can't even spell internet right. Somebody that old, they're going to put it in the newspaper. And like I said, nobody looks there anymore. Now, I've got students that are finding deals on Craigslist. Another great source is residential real estate brokers. They can be a great source of multifamily because a lot of residential real estate brokers will get multifamily properties and they haven't got a clue where to market them because they're used to dealing with houses. And so if you've got a connection with a residential real estate broker in whatever submarket or market that you're interested in, and you tell them, hey, you find a multifamily deal, make sure you tell us about it and you can get some phenomenal deals. I've got great friends that have gotten huge multifamily deals from residential brokers because they didn't know what to do with them. Another great way to find deals is code violations because, if you're an owner and you're getting hassled by the city or county because the yard's too long or there's trash in the backyard, you're not a happy owner. And so that's a great source of deals. Evictions is a great way to find deals. If you've ever gone to eviction court and you see how frustrating it is for owners that are managing properties themselves to deal with an eviction and the glee that a judge will get if they find out that the paperwork was done wrong so they can make them start all over again, you can see why that's a great time to connect with potential owners. And you can get lists of these code violations or evictions in many jurisdictions, and you can mail these people, you can call them, whatever, and see if they're interested if they're disgusted enough to get rid of their properties. Probate attorneys, another great source of deals. If somebody inherits a property, they don't want to have to, many of them don't want to deal with it. They don't want to be a landlord. Just because their parents were doesn't mean they are. Contractors can be a great source of deals. If a seller's going to sell, they're probably going to have the work done to the property before they sell it, and so these contractors are going to know that it's up for sale. Property management companies. If a property management company is managing a property and they know that it's going to sell, who do they want to buy it? Someone that they've got a relationship with. So you need to develop relationships with them. All right, so also as it relates to due diligence, and making sure you don't make any mistakes and dotting your I's and crossing your T's, it relates to picking the right area and making sure that you don't make a mistake when you evaluate a multifamily property. Now, I've got an incredible free resource on my website, and And it's the link's going to be below, but it's a 67-page, what I call multifamily toolbook, and it asks every possible question you can think of when you're evaluating a property. And it's what we use to make sure we don't make a mistake. I mean, it's got mistakes on, about comparable properties, about, market rents, about sales comparables on a property, questions about the market, the submarket, the financials of a property, questions around the condition of the property, and on and on and on. And the price is right. It's free. It's a direct download on my website. Now, that said, if you like total immersion to learn like I do, when I'm learning anything, I like to go live. I do three-day live events a year around the country, and they're not just a great time and an incredible networking opportunity, because multifamily investing is actually a team sport, but they're just me teaching you this incredible business. And I don't bring in outside people to sell you stuff like just about everybody else in the business. Just me teaching you how exciting this business is and how to crush it in this business, and teaching you how to actually take action with what you learn. 80 to 90% of your success is your mindset and your psychology. Only 10 to 20% is the actual real estate stuff. So I spend time on pushing you through fear and out of comfort to build that life of your dreams. So, back to the question, is it a good time to buy real estate in 2020? For multifamily, if you focus on cash flow and you find off-market deals that you can add value to, abso-freaking-lutely. If you're interested in coming to one of my boot camps, it's rodsbootcamp.com, and all the information you need is there, and I hope I get to meet you one day soon. I'm Rod Khleif, wishing you incredible passion and massive success in your business and in your life.